Hello. Welcome back to Market Wake Up. My name's Jordan. This is John. I'm pointed the wrong direction. This is John. You're in the one-stop shop to get up to date with everything you need to know ahead of your trading week. This is where we're going to break down the macro mumbo jumbo. And today, we've got a little treat, actually. John's prepared a little, all I know is there's oil pumps. That's all I know. But John's prepared a little something for us, the big bite. Without further ado, let's get into it. Welcome to the Market Wake Up. Good morning, John. How you doing?
Hello. Yeah, I'm doing really well, mate. How are you?
Yeah, good.
Nice and sunny over there.
It is. It's warm. I've got the aircon blowing on my back. It is a bit warm. It's been a little bit too warm recently. We've had like a run of like 4 days at 40 degrees, so it's been pretty hot. But no, I'm doing well. It's we're back into it. Today is a public holiday, but I didn't have it. I've worked all day today, so I just feel like an honest man.
What bank holiday is this? What is this for?
Australia Day.
Oh, okay.
Australia Day. Yep. So it's the day that Captain Cook arrived in Australia. It's where all the Aussies get out, have a barbecue. I hosted mine over the weekend. Had some friends over, cooked up a nice barbie, good feed, few beers. So yeah, no, I like Australia Day weekend. But now we get back into the market. We get back into the swing of things. What about you? Did you get up to much?
No, not really. It was fairly chill. I had a DIY day. And it didn't actually work, which has really annoyed me. So this evening I'm going to have to get the drills back out. So yeah, it fell off the wall, basically. That's all I'm going to say. So maybe I should stick to trading and maybe not stick to any kind of DIY. I like to think I'm quite useful as a handyman, but apparently not. But it's my house is just crumbling around me.
That's fair. Let's talk about trading. You've been trading much last week?
Yeah, I had a losing week last week. Took a loss on a pound Kiwi short.
Okay.
I was actually it was one of those weird trades. So I got in it. It went sideways pretty much the entire time. I thought this isn't really going anywhere. Surprising data from Trump then says maybe I won't tariff China as aggressively as what I'm going to say I am.
Yeah.
Kiwi, Aussie, all benefited from the back of that. We saw a really nice boost. And then before I know it, cable shot to the upside because we had some really good manufacturing PMI numbers and whatnot, and services PMI numbers, which then kind of shot pound through the roof. So yeah, before I could even adjust anything or do anything, I ended up taking a loss. So yeah, that wasn't very nice. I counteracted it with with a bit of a silver long, but my silver long then got stopped on my trailing stop. So all in all, it wasn't a particularly great week for me. So, it could have been worse. It could have been worse. So.
It could be a lot worse. Russell's looking to short New Zealand dollar, US dollar for the longer term. Interesting. What looks good, Russell? But if you guys are in chat, give us a wave. Say good day. Tell us where you're tuning in from. But it's good to hear from you, Russell. Yeah, it's been a relatively flat week for me. I didn't really pull the trigger on anything, but there were a few things where I got very close to and just didn't. And I'm not sure why I didn't. I would still be in those positions. Nothing bad happened, which is just unlikely. I'm not usually hesitant to pull the trigger, but last week I was hesitant to pull the trigger. I think it's because I knew the weekend coming up. I was just kind of like, I don't really want to dive into this. And to be fair, I've been so deep in it. You know how I do my overlay charts and analysis, prepping for this webinar we're doing on Wednesday.
Yeah,
oh my God, I have gone down such a rabbit hole. Like I have gone so deep. I am looking at milling producers on whether you want to turn sugarcane into sugar or ethanol. And I'm not like I am so deep in the analysis there. I am looking forward to that webinar on Wednesday because I'm looking forward to kind of sharing my findings, whether they're conclusive or not. I'm looking forward to sharing what I've found out. But no, if you guys are unaware, we are doing a webinar on Wednesday. which is going to be us two, and we're joined by Giles as well as special guest. We're going to be putting together our best seasonal trade ideas for 2025 and presenting them to you. So if you guys want to get an understanding on what we're looking at doing this year, Giles as well is he's been in the market for a lot longer than we have. I think it's fair to say, and he's a macro trader also. So the three of us are going to come together and figure our portfolios out, and we're going to do it live for everyone to see. So if you haven't seen it, top link in the description. Come on over, come sign up to the event. It is a sign up only event, so make sure you do register your interest, and we'll get through it. But yeah, no, that's been it for me in terms of market leftovers last week. Any news that got you other than Trump doing Trump things already? I've seen tariffs for Colombia and then revoked tariffs for Colombia, which is interesting.
Yeah, I mean, it's hard not to talk about Trump at the moment, isn't it? I watched the inauguration, and then the sort of, everything's a headline for Trump at the minute, isn't it? Him signing with the big, massive permanent marker on his executive orders and things like that, which, again, it's just all it's a bit of show, isn't it? He's a showman at the end of the day, old Trump. So, seeing any of that is just wild to me. We're going in that balance again, isn't it? It's going to be tough, I think, for at least the next quarter or at least this year, because he's going to try and implement things, I think, fairly aggressively. The problem we've got is there's just the growing uncertainty around what is going to happen, and that's the problem. I think the market at the moment is showing some kinds of sort of hedge here. We've got, from one end, you've got the stock markets that were going and they were ramping up again. We saw the S&P just touch back up into the all-time highs, showing that kind of extreme sort of greed element. The VIX was lower, so there was that correlation there. And there was everyone felt good on that side of things, but then you've still got gold prices, reaching all-time highs again. Is that where the hedge is at the moment, where people are trying to just kind of, mitigate any kind of risk in that sense? But yeah, it's a really difficult time for us because we're very much focused on sort of macro. But when the fiscal side comes into it, it can throw the macro off for a little bit, but then you've still got to keep an eye on the macro underneath to try and really, get that true sentiment. But it's hard to grasp any kind of key or any kind of clear cut, oh yeah, I've got a really good grasp of what's going on in this market now, because we don't know what tariffs is going to be imposed now. I mean, that, to me, probably the biggest story that shocked me was the fact that he said, I don't want to tariff China aggressively, which is almost a big a big 180 on what he's kind of, talking about at the moment. He was talking about 60% on all Chinese goods. And now he's kind of taken that back a little bit. Whether Elon Musk has been in his ear and said, no, you can't do this, you're going to crush Tesla. Or whether, he's thinking, do we really need to go as aggressive? He might have just been using it as a threat, as a little tactic in the start. And then, and it's that uncertainty, which is really hard for traders to grasp. I think I remember back in 2000, in his first kind of presidency, the macro stories were just so here, there, and everywhere. It was kind of hard to kind of get any clear direction. And I think technical traders did pretty well throughout those 4 years. More than anything. Yeah.
I think, if you look at Trump's inauguration, look who he surrounded himself with. He has the biggest business minds in America at the moment there. Right. And while China makes billions in selling to consumers in the US, and that's what he's trying to challenge, is like the margin that they're making selling to US consumers. And that's what he's trying to stop. But at the same time, US businesses buy their everything else, resources and everything from China at those chips so they can have that margin. So he's got a fine balance of, hey, stop selling directly to our consumers, but at the same time, keep selling us, our businesses, at those lower prices. And I think you're going to see something similar to what has happened with TikTok. Essentially, he's not going to tariff China. He's going to say, you guys do what you want to do, but we are going to stop your businesses from operating here unless you give us ownership. And
Yeah.
that's exactly what he's done with TikTok. He's come in and said, hey, TikTok, you guys can stay there. You got to give us 50% ownership. And you know, I think it's Elon Musk is the front runner to own that now at the moment. Or even I think Zuckerberg, I think they're all going, oh yeah, give me some of TikTok. But I think that's what you'll see. I think you'll see, hey, China, you guys are doing great. I respect the business. Go for it. We're not going to let you sell to our consumers unless we own majority share of that business. And that's what I would do in that situation. And I think that's a smart way to take it. And I think realistically, that is the way that he's going to take it. One thing, I know we discussed this last week and the week prior, or it might have been 2 weeks prior, was I feel a level of certainty.
Yes,
I feel.
I don't think I have the same sentiment.
Yeah, which is good, all right, because it makes it interesting. But I have more clarity on whereabouts I want my money to be situated. And one of the things I did do and discuss about it was short emerging markets.
Yes,
I was always like, I don't see emerging markets going anywhere under this. He is pro-America, and that no matter how or what decisions he makes, we know it's pro-America. And that's pretty simple. If you look like the NASDAQ emerging markets ETF that they've got there, the index, like that. Yeah. So you're right. Looking at currencies, I'm like, nope. Maybe over here. But if you look at the grand scheme of things, take a step back and just look at the landscape. We don't know what he's going to target, but we know where he's going to target. And shorting those products for me is the green light.
Yeah, no, absolutely. And I think it's quite interesting, the tariff play, because nobody wins really, I don't think, in a tariff situation. Literally nobody wins, because even if it's from the point of, okay, he hits loads of tariffs and he does go through with it just so that people can look more towards sort of US consumer goods. The idea is that, okay, yes, we create more jobs in the US, and yes, we create demand for US products, but that is the problem. Then it creates demand for US products, and then the prices in the US remain higher as well.
Yeah.
So it just completely takes away from the America first thing, in my opinion, because it contradicts the fact that you want to create jobs, fantastic, but then you're going to go raise prices on the consumer regardless, and it's going to cost individuals and families more to buy those goods. So it's a catch-22. I think he's going to find himself, and that's why he's also pushing very, very big for rate cuts, isn't he? By the Fed. Yes. He's pushing heavy for rate cuts by the Fed at the moment.
The Fed are not going to want to budge if he plans on tariffing everyone, because they know CPI is going to go through the roof, and then they're going to look like mugs for dropping the rates. So they're sitting there going, if anything, I want to go up.
Yeah.
And he's sitting there going, bring him down because I'm going to make him go up.
Yeah.
It's just, it's beautiful. It's beautiful. It's picturesque.
It's insane. It's interesting. But what I did notice as well, the dollar did sell off quite a little bit last week. That was something that kind of opened my eyes up to a similar situation that we had back in 2016, where we did initially see that sort of pump for the dollar, and then we saw actually a fairly weak dollar over the remainder of his kind of presidency. So are we going to see that again? That's another kind of question mark around what we're seeing at the moment. I think a lot of emphasis is that we shouldn't really be seeing a weaker US dollar at the moment. It should be a stronger US dollar, but has the market gone and priced that in already? And it's this sort of deleveraging those at the minute. That's an interesting story, because we're seeing a lot of reversals starting to come in now. This is something that we've spoken about as well. I really liked Kiwi dollar long from the 2022 lows. That started to come off those lows now, but pretty much every major currency pair has now started to reverse a little bit, bar a couple. But euro dollar, pound dollar, Kiwi dollar and Aussie dollar as well started to ramp up a little bit to the upside. So I wonder if that rhetoric is going to continue now. Are we going to start seeing that similar shift? Yields did come down last week, but it's another heavy news week for us. And
I'm going to dive into that. It is a heavy news week, and gold. It's 1% off all-time highs, which I didn't think we would be saying. Not even in February yet. We're still in January. Didn't think that would be a thing. But let's touch more on that after. Let's talk about this week. Today, there's only really one, and that's the Swiss National Bank got a little bit of a speech. I don't think they're going to say anything too concerning. I don't think there's going to be anything too alarming, but you never know. They might want to throw a random thing out there. Which, complete sidebar, did you see Denmark's UN speech to Trump about buying Greenland?
No, I haven't seen it. I have seen a lot of stuff about Greenland recently, but I've not.
You should watch that speech. I would tell you what he says, but YouTube won't allow me. But he starts it off saying, "Trump, let me speak a language you will understand." And then YouTube won't let me say anything else, but he gave him the proper way to say we're not interested. Let's say that. It's worth a watch. It's interesting. He's been fined heaps for it, but I'm still kind of like, nah, I respect it. Like, that's sweet. So you got the Swiss National Bank having a little bit of a speech today. We did have a manufacturing PMI come out of China, which wasn't too bad, 49.1. Yes, down from 50.1, but 49. I'm like, okay, actually, from where we've been recently, I'll cop that. I'll cop that. I don't think that's too bad. Tomorrow's a Chinese bank holiday. Today was an Australian bank holiday. Wednesday is also a Chinese bank holiday. Thursday is always also a Chinese bank holiday. Friday is also a Chinese bank holiday because it's the New Year. It's Chinese New Year, I believe.
You're a snake, I think, isn't it?
I'm not sure.
I'm going to say that. I'm going to say that.
2025
is the year of the snake.
The year of the snake you're going for? It is. It is the year of the snake. That's right. Yeah, well done. Yeah,
look at my knowledge.
Tomorrow, also a pretty quiet day. We are matched with a little bit of CB consumer confidence for the US. Wednesday is our big day. Okay, Wednesday you got Aussie dollar CPI bright and early in the morning. That is forecasted to uptick by 0.2%, so keep an eye on there. Then you've got Governor Bailey having a chat, your best friend. And then we've got the Canadian interest rate decision. I'll skip through the rest. It's FOMC. That's what we're going to talk a little bit about today as well. Then moving into Thursday, you've got Euro interest rate decision also. It is expected to cut rates, the Euro. And then moving into Friday, you got the PCE index coming out of the US and CAD GDP. There's a couple of other red folder and high volatile news dotted in there. I've just given you the headlines, but it is going to be a busy week on the economic front. So make sure your stop losses, your risk management's in check. You're aware of what's happening and when and what assets you're involved in, because there will be some movement today, whether you like it or not. It's coming.
Yeah, absolutely. And this is again one of those weeks where it's almost like these 2 weeks I probably should not have touched a chart, because the lack of sort of certainty around certain announcements. I'll be very, very interested in Federal Chair Powell's speech this week. I'm going to zone in on that one and have a little look at what he's talking about, because that could be something of quite decent importance. Has he spoken since Trump's come in, Powell?
Yes. Yes. Yeah. Oh no. Since his inauguration, no.
Yeah. So since the inauguration, this is the first time we're going to hear from Powell. So okay, this is going to be an interesting one then. So this is something I'm going to really key into, because I want to know the language of Powell, because I don't think Powell is going to come in line with Trump at all. Because
the whole election run, Trump was like, "Hey, I'm gonna fire you."
Yeah, which he can't do anyway. But yeah, it's in. So that clash there, I think, is going to be good for headlines, good for talking points. For traders, I'm not so sure. But I'll be interested to see how that one plays out this week.
When's that? FOMC is
that's Wednesday for me, 7 p.m. GMT.
Wednesday, 7 p.m. your time. Yeah. Okay.
Yeah. So that one's going to be interesting. Also, quite interested in the Euro, in the ECB as well. We've actually seen them cut rates significantly for a good period of time, and we all know why. But are we going to start seeing, the growth start to come back into the EU as well? I think there's a lot of talk about, again, has that Europe move been priced in now? Could we start to see European equities start to climb a little bit off of that? So
let me ask you the question. Do you think the Euro pricing right now is enticing?
Yes.
Oh, okay. So you want to buy?
I want to buy euros. I'm
So
looking.
you think it's overextended? You think it's cheap?
I do think it's overextended. One market that I really like the look of is Euro Swissy. I think that's a market that's something I'm quite interested in. If we think about the Swiss's position, and again, we've got a speech coming up today, which is great. We can kind of reassess what's in the mind of the Swiss National Bank, but the Swiss franc has been aggressively strong because of the political unrest with Europe, but now that's starting to unwind a little bit, and now we're starting to see the fact that the Swiss National Bank are cutting rates aggressively because they want a weaker Swiss franc, and now it is starting to filter through. So, could we go and look for something that's been a little bit overplayed, I think, at the moment, and I do think the Euro story is one that's been overplayed a little bit. Yeah.
Fair. Yeah. No, I don't disagree. All right, we're getting into my favorite bit, the big bite. I've seen a very little glimpse of what you prepared today, so I'm ready. I've got my notebook.
I want to see. Yeah, I want to see the Jono's presentation in the chat. I know people like these little presentations, so I'm going to bring it back. The last one we did was on Bitcoin. And we talked about it. Is it going to go hit 100K and beyond and whatever? And it kind of did. So that was good.
It kind of did.
Yeah. Well, it's starting to come back at the moment. So that's another interesting story that's going on, I guess, because of the old tech thing. But we'll get into that in another time. But I'm going to talk about oil today.
All right, guys. Give a round of applause in chat for the presentation to begin. Jonathan Kibler.
Hey. Right, let's bring this in then. So, our favourite man, Donald Trump. So I've titled this Donald Trump, Oil Prices and the Economic Ripple Effect, because this is where, in my view, Trump is going to try and dictate interest rates, and he's going to try and dictate inflation by trying to bring oil prices down, essentially. But can he achieve it? That is the question that I'm really going to ask myself, right? So in his sort of inauguration speech, he was talking about drill, baby, drill. And that's been the headlines that I've seen kind of everywhere recently. And what he's trying to essentially do is make the US, he's called it liquid gold underneath their feet, because I think the US are the third largest US oil producers in the world. And he wants to use this as a rhetoric to bring down those inflation prices, because as we know, and as we've talked about, and I'll show you a chart later, the correlation between oil and inflation is a strong one. So he wants to try and deliver or at least bring producers in the US to produce more oil to create this sort of rhetoric of bringing down that
increased supply.
Yeah, exactly, bringing down that sort of price. So just a few notes that I've talked about. This was from his inauguration, which I watched on the over the last week or so. But he's emphasized that energy independence is increasing that US domestic oil production. And like I said, the goal is to boost the supply to lower prices and reduce dependency on foreign oil. Now, whether this is going to put sort of, a little bit of a interest on what OPEC does as well. How are the other nations going to react to this? How is Saudi Arabia going to react to this? Because they have a big say in what happens in oil prices as well, being the largest producers. So how is he going to get them on side as well? That's another question that we need to kind of explore throughout this. But like I said, Trump believes that cheaper oil will fuel the economic growth by cutting energy costs for businesses and households as well. So he kind of wants his cake and eat it. He wants to bring down those oil prices to lower inflation, to have interest rates lower, to then help businesses, which creates that robust economy that he really wants to bring and introduce, right? So, like I said, oil prices and the correlation between inflation. So the chart that you can see, the candlestick chart, are oil prices. The little pink line chart that you can see over that is inflation. And we've talked about this a lot in the past, that when you see CPI coming up in the calendar, go and have a flick over to your oil prices, because usually when we see some kind of large uptick in oil, it can directly impact inflation. Why? Because it has an impact on transportation, manufacturing, consumer goods. reduced oil prices, lower production costs, slower inflation growth, right? Lower inflation strengthens purchasing power, encourages economic stability. That's the notes that I've put on there. So oil's going to have a big story this year, and this is something that we're going to keep our eye on. Now, how does this contradict to the tariff situation, inflation, and interest rates, right? So Fed funds rate coming up this week. There's a 99.5% chance that they hold rates this week, which I don't think is a huge shock to everybody. But this is where the pressure is going to come on the Fed now, because what if Trump goes ahead with these plans, invests a lot into the US oil producers, they start to get behind this, they start to, produce more oil, it does start to bring down those oil costs, it does start to impact inflation. The Fed could be pushed into a little bit of a corner here, that they will come under immense pressure to cut interest rates. So, the sort of story of tariffs come into it, obviously, but they will come under immense pressure if we do start to see inflation coming in a lot lower than anticipated. Do I think they will? Not so certain. But, how is he going to influence these players, these US producers, to essentially get behind him? And there's sort of talks that he's going to reduce their taxes. I think they're at 25% corporation tax at the moment. I think he's going to reduce them down to 15%. He's going to try and deregulate them even further as well, so they can go and essentially do whatever they want to do. But it's going to give them incentives to go and produce oil. Now, you could look at that in two ways. How is that going to impact oil prices? Well, like I said, it could see oil prices come in a lot lower. From what he has been talking about at the moment, oil prices have come in lower. They kind of reached those $78, $79 areas. They've started to come back from those now. Do I think this is the turn and it's going to just completely drop lower off these comments? No, I don't think this is necessarily a story for, first quarter or first half of this year, but it could be second quarter, final quarter of this year, maybe even floating into 2026, where we do start to see the impacts of this. But yeah, the situation is the Fed's in a little bit of a tight corner, and it's literally going to be this year is going to be Trump versus the Fed. Trump's tariffs on imported goods increase the cost for businesses and consumers, potentially pushing inflation higher. That's the problem you've got. And then higher inflation is going to counteract the benefits of those lower oil prices. So he's going to have to try and do something to get his own way. What he does is still up to negotiation and debate on how he's going to achieve this goal. But are we going to stand in his way of achieving that goal? I don't know. It's going to be he's going to be very aggressive this year.
Yeah, OPEC is in a tough position. He's played his cards right? Because if he manages to uptick the amount of supply that the US produces enough to drop the cost of oil, right? The demand to meet demand and surplus some, so they drop the prices to be competitive. OPEC then has a choice. Okay, it either keeps producing the same amount and you just accept that it's lower prices, you make less money.
Yeah,
that's option one. Option two is you cut your supply.
Yeah.
Right. So we remain the same and prices remain elevated. But if you do that, you then hand majority market share of the oil market to the US. So they can try and get those higher prices if they like, but you risk just handing everyone over to the US for business measures, and then they can do their best to keep that business or sign long-term contracts, etc. Or you can keep producing at a lower margin and make less money. This is the uncertainty around us at the moment. This is why I think this is a really good story to talk about, because you do have that. This could just continue to, and whatever you say about Trump, there are talks that he is a good businessman, and I guess he's got to be to achieve what he's achieved and been where he's been. So he's very good at negotiation. How aggressive he does negotiation, again, is, is up to debate on how fair it is, I guess, and whatnot. But he doesn't really care about fair. He cares about getting what he wants. So, that would play into his hands, I think. I think if OPEC decide to turn around and go, okay, well, we'll just cut our production,
so that we can continue to make the levels of money and profit that we want to make, then I think it's going to play right into his hands. It's exactly what he wants. So
yeah, it's a win-win situation if they can produce more.
Yeah, absolutely.
And the cost of producing more is also very important.
Yes.
Because if they go and produce more, yes, they might get more market share, but how well you can convert that into profit is another story.
Again, and that's why he's got to try and give these guys some incentives. This is why he's got to reduce taxes so that they can keep their profit margins a little bit higher, right? And that's going to be an important story going forward. But yeah, just put a few notes here. Benefits of lower oil prices. We've kind of talked about these: reduced inflation, lower energy costs. Lower energy costs. Yeah, that's a great story, great headline for the consumer, but it can then be felt in the higher cost of goods from tariffs. So he's got to try and balance these points really carefully. Now, one company. Now, I've stepped out my realm of currencies, and I said to you last week that I do want to try and get into more equities. I do want to try and look into more stocks. So I found this stock, Kinder Morgan, right? So Kinder Morgan is one of the largest energy infrastructure companies in North America, and the company specializes in owning and controlling oil and gas pipelines and terminals. So Kinder Morgan, you can already see the price of Kinder Morgan has risen quite substantially throughout 2024. A big spike happened when Trump got in, basically. So this is a company that could benefit from the idea of more production of oil, because if they're going to be the guys that are controlling the oil and gas pipeline terminals, they're going to have potentially a lot of business coming through. Now, very interesting. I also kind of looked at this and thought, can I get a seasonal on Kinder Morgan and see what's going on? So to add a little bit of pepper onto the chips, right? You got Kinder Morgan. Now, I had a little look at this and I thought this was quite interesting. Now, usually January to February, they don't have, I would say majorly strong, performance, but you can usually see that kind of dip in December, and then it kind of rallies all the way through to the end of February. Get quite a significant dip down through the start of March. But look at this nice little play here. End of March, we usually see, or middle of March, we usually see a sharp turnaround up into April, can even last all the way up into June. And I found this little play. So 18th of March to the 18th of April, there is a 76.9% win ratio. The return on this is, I would say, pretty nice, annualized return plus 102.15%, but I wouldn't take that into account because 2020 was a big part of that when oil, spiked up. Average return 6.19%. That probably is lower if you were to take 2020 out of it, but I do like the idea of this little play here. I think not only is there a potential for a seasonal towards that period of time, but if I just flip back to the chart here, we have risen quite substantially. If we were to see that kind of drop off, this could be a story I think could play into the rest of the year. If this was a company that is going to benefit from the investment into producing more oil, could we have a look at this sort of March to middle of March for an opportunity? So that's my big bite for this week. Talking about oil, how that impacts inflation, how I've got to a stock, bit of a season on the stock as well.
I love it. It's actionable. It's insightful. It's curiosity driven, if that's a word. But I like it. It's everything that I like from a big bite. So I really appreciate it. It's got my brain going, ooh, interesting. Ooh, and I'm personally surprised you went with an equity, given that you consider the situation so volatile, right? And you don't know what to call. You've gone to an oil equity, which
I feel because they could get, if Trump does start to give out government contracts to produce this, could be a sort of good, stable income for that company as well. Like I said, this is a bit of a surface level, look into Kinder Morgan for me because I'm not into stocks usually. So I would like to dive into that a little bit deeper. Maybe you have a bit more knowledge to say this is where you should go and have a little look at that. But yeah, this is one that I just thought, if they get the government contracts to go and produce, you know, what's the situation with Canada going to be as well? Are they going to reintroduce their own sort of, you know, production in the US? And you know, how does that impact Kinder Morgan? Are they going to be the guys that get the big contracts? You know?
Yeah, no, I love it. I love it. I really appreciate it. I got to get a quick little take it to go for everyone. You mentioned it today. It's the year of the snake, so I thought it would be fitting. Okay, the Shanghai Composite Index, right? This is all around the Chinese New Year. This is a seasonal play based on the Chinese New Year. If you see here, 6 days prior to going into the new year, all the way up to 15 days into the future, you can play around with it. 73.9% of the time over 25 years, we do see bullish momentum. Now, we know what Chinese New Year is like anyway, the celebrations, the atmosphere, the energy that they bring. Everyone is in an optimistic mood. It looks like their stock market follows suit as well. Average gain or median return, around 5.15. But if you have a look at the profit on those 17 years that we did go up, 8.29% across the board. So worth a little look in the Chinese New Year. If you want to try and make some money on it, there might be a tad of an opportunity. Guys, I'm going to leave it there with you. We'll be back next week on Monday, but you can catch 2 of our videos this week and our Friday newsletter Wednesday. Okay, head over, top link in the description. Wednesday morning for most of you, Wednesday afternoon if you're in my side of the world. We will be doing the 6 actionable trade ideas from 3 market experts. So make sure you come sign up and be a part of it. Without further ado, John, have a fantastic trading week. Everyone at home, have a fantastic trading week, and we'll see you soon. Cheers.
Bye.